News 9, I'm Karthik Malhotra, and the recently concluded GST Council Meet, the 53rd GST Council Meet has concluded in the capital New Delhi just a few minutes ago. We are waiting to understand what are the tweaks that Finance Minister Nirmala Sitharaman has made to either the GST rates or all other expectations that citizens had. Remember, the 53rd GST Council Meet has concluded in the capital. There were expectations that is the GST on fuel, especially on ATF, likely to get introduced this time around. In fact, in his earlier meetings this month, Oil Minister Hardeep Singh Puri had hinted that his ministry is open to even petrol and diesel coming under GST. We don't know if that got discussed in the GST meet or not, but big expectations from the online gaming industry, hoping that there would be some tax relief to the 28% GST on face value for online gaming, and that too retrospectively. We still don't know whether that got addressed or not in the GST Council meet that was held in the capital earlier today. Other expectations included revisiting the inverted duty structure, where especially automakers have been vying for reducing the GST on imported components that go into electric vehicles. Multiple expectations, but the question really is that did the GST Council really come to any conclusion? Let's first hear our panelists today, Shivam Mehta, Executive Partner, Lakshmi Kumaran and Sridharan, on his expectations on what perhaps transpired in that 2-hour-long GST Council meet today. Shivam, thank you so much for being here with us. Any hope whatsoever on petrol and diesel going under GST?
I don't think so. Petrol and diesel will be considered in today's meeting, but my sense is probably they may look at natural gas, like you mentioned, and the ATF may be considered to be under GST because that has been a demand of the industry, particularly the gas manufacturers, for quite a number of years. Because there is a chain, because their end products are taxed to GST, but natural gas is not subject to GST. So there is a breakage of the chain which has been happening. But my sense is, I think for petrol and diesel, they need to have a concurrence of the states. It's too early to have that. So I
Will
don't
the
think
states
so
ever agree to it, Shivam? Will the states ever agree to GST on petrol and diesel? Because that's a major chunk of state revenue. Are they ever going to be willing to compromise on that?
See, it's actually anybody's call. Like if you look at in the past in liquor industry, also there was a dispute on ENA, which in the previous GST Council meeting they decided to give up GST on ENA. So if that kind of a barter can make over, and they can think of bringing petrol and diesel under GST, that will be a big relief, very very big relief for the country.
Okay, and what about ATF? What happens if ATF does go under GST, even if it is taxed at 28%? What happens to the cost which airlines have to incur on keeping those aircraft afloat and eventually for the end consumer?
No, I think ATF, again, coming to GST for ATF will be a big relief for the airline industry as well, because that will be available as credit to them. Only problem can be the tax credit on ATF may not be available when the airlines are working under the in the economic airfare, because the tax on inputs is not available. But for other cases like in business, etc., proportionate credit they can avail. So that will be kind of a relief for them, because right now whatever the taxes are paid on ATF is not available as a credit to them.
Okay, so in case ATF was to come under GST, what is the percentage of change in the eventual fuel price that airlines have to pay to procure that ATF? Do you have an estimate of how much cheaper in percentage terms is it likely to be?
It's too early to comment on it because there are no formal numbers. Definitely, this was something on the cards. Once the details are there, we will be able to get more details on that.
Okay, and while we await the details, and remember, Finance Minister Nirmala Sitharaman is going to chair the press conference very, very shortly. But I think, Shivam, it's important to address the elephant in the room as well, and big expectations on online gaming. The slab that they got from the GST Council last year of 28% GST on face value as opposed to 18% that they were paying on platform fee, a massive amount of tax notices and tax demands which have have reached them. What happens? Do you think there is any way that the GST Council this time around, even though when they met 8 months ago in the month of October, they had said there is going to be absolutely no reconsideration and had said that tax is not retrospective but rather just a clarification. Do you think there would have been any midway, mid-path arrived at the GST Council?
Like you rightly said, it's a big elephant in the room. So why I'm saying that is, for the past period, there are like 70 companies in this total domain. The total demand is what you shown on your screen is 1.12 lakh crores. If you compare to the monthly collections of entire industry of India, it's average 1.7 lakh crores. So only one industry is slammed with the notices, which is more than 1 lakh crores. So you can understand the kind of demands. Right now, industry is more focused on if their past demands can be waived off, rather than what they are trying to impose, what they imposed in October. Certainly, October, after the amendment, their tax structure has got a hit where their contribution to the revenue was only 600 crores, which has gone up to quarterly figures I'm telling you, which has gone up to 3,500 crores. So you can imagine their contribution to the tax revenue has gone 6 times. But their major worry is the past demands, because if those demands are not waived off, then these companies can actually have to file bankruptcy. My sense is they might have to bring, it's a high time that GST legislation brings us section which says that government has a power to declare something as non-taxable, or where the lower taxes are paid, to waive off those taxes, like it was there in excise and customs, which was, if a similar section can be introduced in this meeting, and then they can issue a notification, and at least whatever the lower tax has been paid in the past, that can be, if at all, though this matter is already sub judice before Supreme Court has to take a call on it. But if the government can, if what the immediate relief which this industry is looking from the government is for the past demand, if they can bring some exemption notification, for which they need a section in the legislation, which my sense is this time, I think they might bring that section. So that can be a 50% win for them.
Right.
About the new tax regime which you were talking about, just one more minute I will take on that. That was introduced in October 23. That was subject to review within 6 months period. The council itself has met after eight months, but I don't think so they will be reconsidering this, because for the past period matter is already before Supreme Court, etc. But the industry is more focused on the past as of now.
Right. So you're saying that there is a likelihood that the 28% GST in online gaming on face value is here to stay. Industry has perhaps come to a reconciliation and pretty much have tuned themselves to be okay with that 28% high tax, sin tax as they call it, pretty much in line with betting and lottery, which was not the case earlier, because industry was saying that online gaming is about chance, is about skill and not as much about chance. But the retrospective tax demands could perhaps be looked at afresh in the GST Council meet.
That's right. One more thing what you mentioned about now, because they are able to recover from the customers, right? So if you put a money in the platform, they will recover 28% and pay to the government. So because they now the law is pretty clear to them what they have to do. But for the past, they haven't even thought of these type of demands. So major worry is the demand which you are showing on your screen right now. So I think if that can be taken care of, that will be a big relief for the industry.
But is it in the interest of the government to take care of that? Because imagine you've got outstanding taxes to be paid to the government to the tune of 1.12 trillion rupees. Add the RBI bonanza which the government just received a month back of 2.11 lakh crore rupees. The government is sitting pretty on on over 3 trillion rupees, which could obviously aid the government cater to its fiscal deficit target of 5.1% in this financial year.
But you are right. It's a huge amount of money for the government, but you can't actually collect the taxes at the cost of the business. If the companies are going to file a bankruptcy, they are going to be wiped. If the entire industry is going to be wiped off, there is a time to rethink about the show cause notices which are pending before the courts.
Stay with us. We will slip into a very short break. When we come back, of course, we will have the Finance Minister live at the press conference after the GST Council meet. Don't go anywhere. Come back right here on News 9.
we talk about India, unfortunately the country has the highest burden of road crash fatalities.
तो लगभग 76% लोग pedestrians और टू व्हीलर वाले हैं जिनकी डेथ हुई है.
While the highways are getting better in India, the local roads, the city roads, the town roads, these need to be improved.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Welcome back. You are with News 9 Live. You're in conversation with Shiva Mehta as we anticipate Finance Minister Nirmala Sitharaman initiating that much-awaited press conference after the first GST Council meet in the last 8 months. This is the 53rd GST Council meet, the first in the last 8 months, like I mentioned, and also the first since the third term of the NDA began and since Prime Minister Modi took office as Prime Minister for the third term. Is there going to be any relief for the common man or not? We were talking to Shiva Mehta. We'll continue that conversation with Shiva Mehta, Executive Partner, Lakshmi Kumaran and Sridharan. We were talking about online giving, Shivam, but I want to take a slight pivot now and talk about the rationalization of the tax slabs. There were some talks in the corridors that there could be perhaps, instead of the 4 basic slabs, if you keep the 3% tax slab aside, in the remaining 4 GST slabs, there were some expectations that perhaps the government could now do away with one of those slabs altogether and be reduced to 3. In fact, the 12% or the 18% tax slab was in question. Shivam, is there any merit in the GST Council really looking at 3 instead of 4 broad tax slabs if you keep the 3% tax aside?
See, I think if they remove 12 and 18, that's my personal view, and bring it back to, let's say, average 16, that's not going to have too much impact on the government revenue. Maybe an average of, let's say, 15%. So we have 5, 15 and 28. Let 28 be for the luxury and the sin goods, 5% for the overall beneficial goods. Keep an average slab of 15. The kind of disputes which are going on the rate structure can come down substantially. So therefore, government should definitely look at it. But like we were discussing, it's too early. I don't think so. This meeting there will be any rationalizing. That's my personal view. After the government stabilizes, probably this is something which government should look at for a larger interest of the country.
Okay, so if we were to look at a 15% tax slab that you were talking about, if not in this particular amendment to GST rates, then going forward, what really happens? Which are the goods that move from the 18% tax bracket to the 15% tax bracket? And which are the ones that will move from the 12% tax bracket to the 18% tax bracket?
Okay, so broadly 18 covers all your general purpose items, right? All your FMCG products, all your domestic goods broadly are under 18. They will come back to maybe a 15%, so there will be a reduction there. 12% is for a very, very specific category. The list is not huge, but definitely bringing them at the 15 will not increase the cost for a common man. So if you cut down even a 3% from 18% category, that list is the biggest list in the rate schedule. So bringing from 18 to 15 can make a life easier for the common man. That's something which the common man is looking out for, and it will be a great relief for the country as I mentioned.
Okay, and FMCG in any case is akin to essentials. If you talk about toothpaste, you talk about shampoo, which currently attract the 18% GST, it is much higher than the 5% GST or the 6% GST, which is on essentials, 5% in fact on essentials. So isn't there in any case some sort of a dichotomy here that you have things which are as close to essentials as possible but taxed instead of at closer to 5% at closer to 28%?
No, not really, because if you look at from what was there pre-GST, these goods were always used to be taxed at around 20 to 23%. So initially, when the GST was introduced, most of these FMCG goods were at the 28% category. Whether if you call it as a, the things you eat, maybe chocolate, etc., or your shampoo, perfumes, etc. In November 2017, they have brought it to 18%. Now, bringing it to, if we remove the 18% slab, these are the goods which will be in the 15% category, which is fairly, if you look at worldwide tax structure also, that will be fair. Only thing is, the complications which are there between what is falling under 12 and 18, that can get reduced, and overall the revenue will remain mostly same, or maybe slight dip in the revenue, but we have huge numbers now. Like if you look at the collection which we had in the month of April 2024, it has crossed whooping 2 lakh crores. So I think
Yeah.
the country is in a position to have this, and definitely more and more SSC being added. You talked about the elephant in the room, online gaming contributing huge to the GST revenue. Government is in a position to think about it. I think it's the right time. If this call can be taken, it will be a great relief.
All right. And news which is coming in right now and is flashing on your screen as well, Shivam, if if you can weigh in on that the center is actually talking about timely tax devolution for states and asking the states to actually proactively take up that 50% interest-free loan which the center wants to offer them. What does it mean for the states and what does it mean for the common man? Because the government is pretty clear at the center that this is going to be a loan which will be citizen-centric and for citizen-centric schemes. So this timely tax devolution, what does it mean for the states?
No, actually, I think what this probably is how the division of funds between center and the state. So states have been demanding their portion of it, which has not been there. I think they are talking more about that. I'm not sure about what exactly this news is, but it more looks like states to utilize their interest-free loan and special assistance schemes instead of looking at the GST collection. I think it looks to me like that.
And there is, of course, also this concern from some quarters in the industry about this inverted duty structure, which some certain specific industries are subjected to, especially electric vehicles. For example, the lithium-ion batteries, which are mostly the components for those are imported, they attract a GST of about 28%, whereas the final car itself, the electric vehicle, attracts a GST of only 5%. So the tax on input being much higher than the tax on the final product. And this sort of asymmetry in the tax system definitely seems like an issue which is bothering some quarters of the industry. What exactly is the complexity of the inverted duty structure, and how do you think the government should address it?
Okay, like you talked about EV vehicles. EV vehicles, majorly when you make a vehicle, at least a EV vehicle, the major cost is battery, like what you mentioned. Battery is 18%. GST on EV is I think it's 12 now. So the difference is 6%, which remains in their books. And although there are provisions in the law by virtue of which you can file refunds of the accumulated credits, but it takes some time for them. Also, in the law, apart from inputs, when you are in the inverted structure category, there are a huge lot of services which you consume. So let's take an example of an EV manufacturer. EV vehicle manufacturer, he might be taking services of advertising, etc., which are again all taxed at 18%. So that adds up to the kitty. The refund which you get is only of inputs, not of the services. Therefore, the taxes which they are paying on the procurement, they become like a backlog in their books, which can never be recovered, not even in the form of refund. So what these industries, particularly companies like EV companies or other industries which are in the inverted setup, footwear for example, they are looking for having a rationalized rate where at least the rates on the inputs are cut down so that they do not have these accumulations, and whatever are the future taxes, they can pay from the accumulations which they are carrying from the past. So that's what the demand of the industry. That's a real problem for them. If they can actually rationalize the rate structure, maybe subject to the end use, because battery might have a multiple use, but if you are able to establish that it is for this industry, if they can remove the inverted structure from the total rate structure schedule, it will be a big relief and it will be important for these industries in that sense.
All right. Well, Shivam, stay with us. We are still waiting for Finance Minister to start that much-awaited press conference. And we will, of course, come back after an exactly 1 minute short break right here on News9 Live, where, of course, we will try to decode either before or after that press conference on what potential GST changes could mean for you, the end consumer. Don't go anywhere. We are back in exactly a minute from now.
This is News 9 Live, India's only digital exclusive live stream. For the early adopters, bringing you the news 24/7. For the smart audiences on the smartest TVs. News 9 Live. Stream now on your smart TVs.
There are beautiful golf courses, there are well-played golf courses, there are great greens. But I think we are a combination of everything.
Now, because of the nature-friendly atmosphere here, plenty of water, you can hear the birds. So lots and lots of birds live on this golf course.
Every corner you have a different vista. You have the beautiful Sahyadri range behind you and it's just endless. It keeps going on and on and on and on. So I think no matter what floor you are, you're always slapped in the face by this most amazing view that takes your breath away for a second.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
We will be cutting live to Finance Minister Nirmala Sitharaman as she presides over the press conference on the recently concluded 53rd GST Council Meet. But until then, we have with us Shivam Mehta, Executive Partner, Lakshmi Kumaran and Sridharan. Shivam, we have been talking about a lot of issues right from ATF going potentially under GST, the low probability of petrol and diesel for the foreseeable future coming under the ambit of GST. You mentioned that online gaming may find some relief, if not in the total quantum, but at least in the payment schedule of the retrospective taxes which were slapped on them last year, but very little possibility of that 28% GST on face value being revised. And then, of course, we spent a lot of time on the inverted duty structure as well. I want to come back for the interest of our viewers back on what potentially the changes in GST could be considered and should have been considered to reduce the burden on the common man, who is in any case, broadly under this massive inflation which has begun to ebb out a little, but still at sticky levels and high levels, especially when we talk about food inflation. Now, whether or not Finance Minister will give any direct tax benefits in the upcoming budget speech in the month of July, in indirect taxes, especially GST, which in any case is applicable on pretty much everything that consumers buy after paying a hefty direct tax, is there something available with the government to reduce the tax burden and the tax outgo, direct or indirect, on the common man?
So let's address it in a very simple way. Okay. Now, if the goods are completely exempt, that doesn't mean that they will be cheaper. Okay. Because there are a lot of inputs which go in the chain. If the goods are exempt, then it can actually result into increase in cost of the goods. That we have seen in the past has happened with many products which were earlier at 5% or 12% category. Industry represented that they introduced an exemption and the cost, instead of getting reduced, got increased. Take an example of a sanitary pad. It happened with it. I mean, initially the GST rate on sanitary pads was 5%, which is quite an essential commodity. And after the representation from the industry, it got reduced to 0. So actually, instead of reducing the cost, it increased. So somebody has to keep a tap on what kind of rate structures are applicable on the goods. And like I said, reducing the category of 18 and increasing the category from 12 to 15 can be a big relief for a common man. most of the products which you see around, maybe a pen or a mobile phone or a watches or TV, fridge, etc., all of them fall broadly under 18% category. So if you take care of that, it can be a big relief for a common man. Having said that, also see overall business also suffer a lot of tax costs, in the sense there are huge demands which are pending. Like we talked about gaming, there are multiple industries which are having these tax demands. What important thing can be, if some kind of it's high time, it was a new law, people were not aware of it. If this government can think of bringing some kind of amnesty scheme for the past, and give some relief to the industry, once these past demands are cut down by way of an amnesty scheme, the overall cost of the industry will come down. We can see some kind of relief for the end customer also. These are the two things which I think government should look upon.
So, Shivam, if I'm hearing you right, and I don't know, correct me if, if my understanding is misplaced a little, but broadly, there are three challenges which the government is facing right now. Number one is inflation, which the fiscal policy or the monetary policy right now is unable to do much about, because the inflation continues to stick because of rising food prices. So, food prices is something which is difficult in, because we are so dependent and it's so contingent on monsoons, we are unable to really, figure out a way to get out of that sticky situation of rising food inflation. Then the other problem which the government is facing right now is employment. And unemployment, especially in urban areas, is obviously something which pinches the government, because urban unemployment will lead to lower direct tax collection for the government as well. And the third thing which the government, it's not a challenge, it's pretty much an opportunity, is high GDP growth. Now, our GDP numbers are stacking up well. Inflation and unemployment continue to be a problem at a macroeconomic level. So, is there not merit in the government actually putting more money in the hands of the people by reducing taxes, then helping the industry also with lower taxes generate more employment through capex investments, and eventually when there is more money in the hands of the people, there is going to be an upliftment in the consumption, overall adding to the GDP growth. So it seems like a fairly simple trinity, not the impossible trinity. It seems like a fairly simple trinity. Should the government not really go ahead and make citizens get access to more money in their hands?
So on one side of it, what you are saying is right, but you have to also see the other side of it. Like the country is already under a deficit, we all know. So reducing a tax structure to an extent wherein ultimately this deficit increases may not be also right. So you have to keep a balance between both of them. While the numbers are really impressive, if you look at the numbers of GST collections which are there, it has actually risen. If I compare to what was there in May 2023, it was just 1.5 lakh crore, and now it is more than 2 crore. So definitely the country is improving. The GST collections really reflect that. More and more, the law is becoming more clearer. People are becoming more compliant. There is more. The collections also show that there is more transparency in the system. People are aware of what are the correct taxes. They are moving towards the right approach. We are in the 7th year of GST. Now people are also matured with getting matured with GST. So with these increased numbers, definitely there is a possibility of rationalization of rate, but we have to keep in mind that there is a deficit also. We cannot certainly cut down the rates to bring everything under 5% and then, running back and increasing the tax rate back to 18. That can create more havoc in the country. So one has to restructure the rates for sure. Best is introducing an average rate of 15%. There could be relook at the goods which are in 12% category, which can be shifted to 5. I'm certainly not in the favor of introducing exemptions for the goods which are 5% category, for the obvious reasons I explained you, because most of the goods are taxed at the input stage. Bringing zero can increase their problems. Therefore, one has to look at the rate structure completely, or I'll say from a scratch, restructure it, realign it, and like you said, let the buyer have more money in hand or more savings in hand so that he can spend more and the GDP can go up.
All right. Well, I think we will slip into another very short break at this point. Shivam, we will be back and we are hoping that the press conference, the much awaited press conference by Finance Minister Nirmala Sitharaman on what really transpired in that 53rd GST Council Meet will begin very shortly. We are back in just a minute. Shivam, please stay with us, and even you, our audience, don't go anywhere. We are back in just a minute.
When we talk about India, unfortunately the country has the highest burden of road crash fatalities.
तो लगभग 76% लोग पेडेस्ट्रियंस और टू व्हीलर वाले हैं जिनकी डेथ हुई है.
While the highways are getting better in India, the local roads, the city roads, the town roads, these need to be improved.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए. जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर. पैसे का सवाल है तो जवाब है मनी 9. आजादी पैसे की. अभी डाउनलोड करें.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
There are beautiful golf courses, there are well played golf courses, there are great greens. But I think we are a combination of everything.
Now, because of the nature-friendly atmosphere here, plenty of water, we have, you can hear the birds. So lots and lots of birds live on this golf course.
Every corner you have a different vista. You have the beautiful Sayadri range behind you, and it's just endless. It keeps going on and on and on and on. So I think no matter what floor you are, you're always slapped in the face by this most amazing view that takes your breath away for a second.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're right here with us on News 9 Live, and we are anticipating Finance Minister Nirmala Sitharaman to kickstart that press conference after the 53rd GST Council Meet concluded just a few hours ago. Shivam Mehta, Executive Partner, Lakshmi Kumaran and Sridharan continues to be right here with us. Shivam, news flashes which are coming in right now, unconfirmed at the moment, are suggesting that perhaps there could be a change in the GST law along the lines of the Section 11A of the Custom Excise Act. Now, this Custom Excise Act Section 11A means that in case there is a tax demand on a party and that party has not really been able to fulfill those tax obligations in a period of 5 years, then a show cause notice would be served to you. Is that understanding right? And if it is, then what do you think this particular news flash really means? That could it really be some sort of a warning to the online gaming companies which are right now obviously grappling under the pressure of the retrospective 28% GST on face value?
No, I think it's other way around. If you remember, I just mentioned we were talking about online gaming, that probably it's a high time they bring a section in the law which says that if because of a general practice, people are paying lower rate of tax or are not paying taxes at all, the government should have a power to issue a notification and call it as, for the past period, there will be no tax demands. And what you were talking about, section that was 11 C in central excise, similar section was there in customs also, 28A. Rather, 11C is in statute books from 1978. It's as old as that. So they can, while introduction of GST itself, this section should have been there. But it's never, it's better to be late than never. So it's right time that because there are huge demands for the past period, not only in gaming, but in liquor and in other industries, particularly auto component industry, they are facing huge show cause notices because they were, since beginning of GST, the industry practice was the goods will be taxed at 18%, but because of some Supreme Court judgment in the pre-GST regime, they have got the notices now that your product is not under 18 but 28. Now, this type of section can actually give power to the government that if because of the general practice, a class of people or the entire industry was paying no taxes or lower rates, they can actually issue a notification and exempt for the past and let for future they pay the correct taxes, whatever.
Right.
Now, so it is something which I think this council meeting is under the agenda. That's what I feel. This can be used for waiving these huge tax demands which are on the street for the past period. They can introduce exemption notification and simply say whatever has happened in the past has happened. For future, anyways, I feel industry is more or less aligned. Now they can collect from the customer and pay to the government. At least the industry will survive, I'll put it that way.
Right. So then what you're saying is that in case that was the route that the government would take, then from the 1st of October, this 28% rule would apply and the government would exempt all the lapses prior to the 1st of October. Or is that going to kick in after the 53rd GST Council meet, which is today?
No. So this is going to be the provision which will give power to the government. Government can issue a notification from the retrospective effect also. So this provision was missing in the statute books for sure, but government now, if it is now introduced, they can issue a notification under this waiving of the past demands, not only for online, like I mentioned, it is there also there in automobile industry, it is also there in liquor industry, etc. They can issue a notification and waive the past period demands. It has happened in the past. In excise, there are numerous notifications on these levels. You remember like in vending machines, wherein when you go to the cinema hall, they give you Coke or Pepsi in the vending machine. Nobody used to pay excise duty on it. And then suddenly a judgment came or the clarification came that it is payable. People went to the government in excise regime and asked for a waiver. They gave it. They issued a notification. They said for the past, whatever has happened in the past, it has happened. From future, start paying it. For past, we will give a waiver. That used to be used very, very frequently in excise and customs. Wherever entire industry was under a bona fide belief, they used to do it. But similar section was not there in GST. So when we used to file a representation to the ministry, they used to always say, I don't have a power section, there is no section in the books. So if this section is there, industry is looking for a big relief. Online industry, I will say half of the battle is won. Only they have to push the government for the notification in the past.
Right. So I want to come back to in fact something we touched upon briefly, but back to the possibility, if not now, then at some time in the future, the low probability, but of course in the realm of possibility of petrol actually coming under GST. While one does appreciate and understand that it is a large chunk of state revenue, but petrol coming under GST or even diesel for that matter is going to make the life of common man much easier, because petrol prices, which are right now hovering in the range of about 100 rupees a litre. In fact, just a week ago, Karnataka had hiked petrol prices and now it is as high as 103 rupees a litre. If petrol were to be brought even under the 28% GST ambit, then potentially and this is absolutely a rough back of the envelope calculation, potentially you could have petrol prices at 66.75 rupees a litre. Shivam, is this calculation making sense to you? Are there other components that we have missed out in including in this calculation of petrol prices if hypothetically the 28% GST were to apply on petrol?
28 is not the highest bracket. There are on aerated beverages, the rate is as high as 40. There is a component called compensation cess also, which is missing in your calculation. But definitely the demand of the industry is, at least for the diesel, if they can, once petrol and diesel is brought in the GST regime, if they can have a tax structure in such a manner that diesel driven vehicles are at least at the par with, till the time we have proper EV infrastructure in the country. If till that time diesel can be brought under GST and the tax structure is neutralized and diesel is at a par with, so that my cost of running a diesel vehicle is at par with EV, there can be like you were talking about some time back, you were talking about GDP, more money in the hands of the people, etc. That can be a big relief for end customer in that sense. Okay. But certainly not, I don't think so. They will stop at 28 because they definitely can add compensation cess, which can make it around 40 or more than that. But definitely there will be a reduction, but not as low as what you are showing in the screen.
Okay, I want to spend some time even on the 28% GST slab, and you have items like air conditioners, for example, and cars. No matter whether you buy a small hatchback or you buy an SUV, of course the SUV comes with added cess, but cars and air conditioners, for example, two large consumer categories which require people sometimes to even take a loan, and right now in the high interest rate regime, the loan rates are also high and EMIs then become higher. Is there merit in considering for the sake of GDP growth and for the sake of giving a fillip to the economy and the consumption in the economy, reduce certain number of items from the 28% tax slab? I mean, if 28% is the sin tax, and if it is applicable on, on tobacco and on other sinful items like, let's say, online lottery or casinos or even, let's say, gaming for that matter, does automobile and air conditioners, for example, merit a 28% high tax?
See, now, so far as vehicles are concerned, it is even higher than 28, as I explained.
Right. Shivam, we have Finance Minister live now in the press conference. Let's cut to it and see what really transpired at the 53rd GST Council Meet.
Today, we had invited the state finance ministers with two things in our mind. As you know, the pre-budget consultations are going on, and it is a normal practice that we call the state finance ministers also to participate in the pre-budget consultation. So the first half of this day, in the morning session, pre-lunch, we had the pre-budget consultation with finance ministers. Post-lunch, we held the GST Council meeting. As you know, the last meeting was held sometime in October last year. And because of elections and states being busy with the campaign, just as we were busy as well, we thought it was better utilized if the time was used for both the budget consultation and also for the GST Council. And in this GST Council, therefore, I must upfront tell you that while there were a lot of issues on which the Fitment Committee and the Legal Committee had worked and readied quite a few agenda, considering that we were meeting only for half a day, some agenda were taken up, considerable number for today. But even as we concluded today, we acknowledged the fact that we have ready agenda points which we could not take up today for want of time, which we'll take up in the next meeting. And therefore, it was also decided, keeping in mind one or two matters of urgency, which the states also had in their mind, to hold a GST meeting at the earliest after today, which will be sometime post the budget session, maybe sometime middle of August, before the end of August is when the next meeting will happen, where the agenda which we couldn't complete today it wasn't tabled also, but just to let you know that there was enough agenda. Some of them got to be discussed today, and the rest which could not be put on the agenda list itself will be carried on for the next meeting. But today, the 53rd GST Council meeting has actually taken a lot of decisions on trade facilitation, easing compliance burden, and giving relief to taxpayers in terms of compliance easing out. So this will benefit the traders, MSMEs, and taxpayers, is my strong view. I will just flag those issues and not get into the details. Later on, you can always ask us the question and we'll go about. First one is that there was a decision taken today and the GST Council recommended waiving interest and penalties for demand notices that have been issued under Section 73 of the GST Act. What are the items which are under Section 73? Cases not involving fraud, suppression, or misstatements. So, for all those notices which were issued under Section 73, for the fiscal years 2017-18, 18-19, and 19-20, the Council has recommended waiving interest and penalties on the demand notices which have been served. And this will be applicable in cases where the taxpayer pays the full amount of tax demanded in the notice by 31/3/2025. So notices were issued for those 3 financial years under Section 73 of the CGST Act. So if the taxpayer comes forward to pay the total amount before 31st March 2025, he shall not have to pay the interest or the penalties which have been normally put on them. So that relief has been given. Again, the Council has recommended, I'm going to the next item. Council has recommended that the time limit to avail input tax credit in respect of any invoice or debit note under Section 16(4) of the CGST Act through any GSTR 3B return filed up to 30/11/2021 for the financial years 17-18, 18-19, 19-20, and 2021 may be deemed to be 30/11/2021. So, for the same requisite amendment, retrospectively with effect from 1st July 2017, the Council has made a recommendation. Moving to the next item. In order to reduce government litigation, the Council has recommended a monetary limit of 20 lakh for GST Appellate Tribunal, 1 crore for High Court, and 2 crore for Supreme Court for filing of appeals. Filing of appeals by the department before these legal fora. Specific amounts, I repeat, the Council's recommended amounts, recommended monetary limits are 20 lakh for GST Appellate Tribunal, 1 crore for High Court, and 2 crore for Supreme Court for filing of appeals by the department. So I go to the next one. Council has also recommended that the maximum amount for pre-deposit, maximum amount of pre-deposit for filing appeal before the appellate authority shall be reduced from 25 crores CGST and 25 crores SGST to 20 crores CGST, CGST is 25 crore, comes to 20. SGST is 25 crore, comes to 20 crore. And that is the maximum amount of pre-deposit for filing appeals before the appellate authority. Also, the pre-deposit for filing of appeal before the appellate tribunal will be reduced from 20% with a maximum amount of 50 crore CGST and 50 crores SGST to 10% with a maximum amount of 20 crore CGST and rupees 20 crore SGST. So that is a recommendation. There are one or two which I am not stating it here for want of time, but the complete decisions will be sent to you by mail. Council has also decided and recommended that amending the provisions of CGST Act to provide that the 3-month period for filing appeals in the GST Appellate Tribunal will start from a day which shall be notified by the government. So, the President of the Tribunal has assumed office, and the said period for filing filing appeal by the taxpayers will expire on 5th August 2024. But there is a need that we need to give an extension, so we've come up with this decision. The next one I'm moving over to is, in order to help small taxpayers, the Council recommended extending the time limit to furnish the detail and the returns in the form GSTR 4 from 30th April at present. At the moment it is 30th April. The Council has recommended that it be extended to 30th June. And this is for GSTR 4, those returns which have to be filed. This will apply for returns for the financial year 2024-25 onwards. The next one I'm moving on to, the Council has recommended requisite amendment in the CGST rules to provide that interest would not be charged on an amount which is available in the electronic cash ledger on the due date of filing the GSTR 3B return and is debited while filing the said return. This will ease interest burden on the taxpayer. I'm moving to the next decision, which is again taxpayer friendly. The Council has recommended again insertion of a functionality by way of Form GSTR 1A, which would allow a taxpayer to add any particulars of current tax period which he may have missed out on in reporting in the GSTR 1. So if he missed out on reporting in GSTR 1, there shall now be a form called GSTR 1A in which he'll be able to do that for the current tax period or to amend any particulars which are already declared in GSTR 1 for the current tax period before filing GSTR 3B return for the current tax period. So one gets filed if there's a missed out fact or you've done some error, you can correct it in the GSTR 1A. You can't, of course, go back for the current tax period is what is being said. Then there is going to be a rolling out of biometric-based Aadhaar authentication in an all-India basis. You know that we ran a pilot in Gujarat, also a pilot in Puducherry. There have been very good inputs coming out of it. So this will help us to combat fraudulent input tax credit claims made through fake invoices. In the cases where the applicant had opted for Aadhaar authentication and where the case has been identified on the basis of data analytics and risk parameters on the system. These have been tried in the GST Subhida Kendras, and this will be taken up on an all India basis. So the GST Council has today recommended to roll out the biometric based Aadhaar authentication of registration of applicants on an all India basis in a phased manner. So if these are matters which came through the legal committee, there were a couple of clarifications issued by the fitment committee. They've issued quite a few, but I'm highlighting one or two. Council recommended to prescribe a uniform rate of 12% on all milk cans, meaning steel, iron, aluminium, which are irrespective of the use. They are called milk cans, but wherever they are used, that will be the rate applicable, so that no disputes arise out of it. They have a standard shape, so that will determine what is a milk can and what is not. Then Council also recommended to prescribe a uniform GST rate of 12% on all carton boxes and cases of both corrugated and non-corrugated paper or paper board. This will in particular help the apple growers of Himachal Pradesh, the apple growers of J&K, whose request it has been for quite some time. The fitment committee has also recommended it now. There are details about HSN codes on this matter, but simple step is corrugated, non-corrugated, carton boxes made of paper or corrugated paper, non-corrugated paper or paper board will all benefit from this. Council also has clarified and recommended that the clarification be put out on that all types of sprinklers, including fire water sprinklers, will attract 12% GST, and to regularize the past practice on an as is whereas basis. Coming to the next point of solar cookers, Council recommended to prescribe 12% on all solar cookers, whether it has single or dual energy source. On services, there are just 2 points which I'll highlight to you. Services provided by Indian Railways to the common man, sale of platform tickets, facility of retiring rooms, waiting rooms, cloakroom services, battery operated car services are being exempted from GST. Further, intra-railway supplies are also being exempted. The other, which is very important, service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Please let there be clarity. Hostels which are for students which are within a resident which are within an educational institutions are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. But listen to this, please. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. So it can be hostels run by Samaj, so that poor people belonging to their Samaj come there, stay there for 20,000 rupees per person per month. They will not be worried about GST at all. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days. So it's not like, I don't want to take the name of branded names. It's not as if tourists who come and stay for 3-4 days and go away, no GST. No. It is meant for students, and therefore if they come and 90 continuous days if they stay, yes, they're exempt. Up to 20,000 rupees per person per month. So hostels run for people who come from rural areas and stay in some hostel which is run by either communities or social welfare organizations, not of the government, even private. They are not going to be touched by GST, provided it is 20,000 per person per month, and provided that is continuously occupied by that person for 90 days at least. I've just highlighted a few points, both from the legal and fitment committees. More can be answered even as you ask questions. There were quite a few new ministers. Was there a list of the committees? Some committees have had newer ministers taking charge in the place of ministers who were earlier there. As we go along, I'll mention it. Of immediate interest will be the Rate Rationalization Committee, for which the Deputy Chief Minister of Bihar, Samrat Chaudhary, has been given charge.
Ma'am,
That's
should we open the floor for questions now? I'll request all of you to begin, and as and when you ask your question, please specify your name and organization. I begin in the center, 124. Ma'am, 124, the first question.
Ma'am, good evening. Shishir from Hindu Business Line. My question is about this online gaming, casinos and horse racing, because in the last meeting, there was a recommendation that it will be reviewed after 6 months, the progress. So
and that's what we just heard Finance Minister Nirmala Sitharaman after the just concluded 53rd GST Council Meet. Some interesting inputs coming from the Finance Minister, but nothing really on what was expected on the lines of the 28% GST on online gaming. There's been absolutely no mention of that by Finance Minister Nirmala Sitharaman. Even the expectations of the aviation turbine fuel, or ATF, being under GST has not been mentioned by Finance Minister Nirmala Sitharaman. Of course, we did hear certain sections of Section 73 of the GST Act, the demand notices which were issued by the GST authorities between the financial years 2017 and 2020. If the amount has been paid in full by the 31st of March 2024, for all the demand notices that were issued between 2017 and 2020, Finance Minister Nirmala Sitharaman has said that these demands served under Section 73 will not be subjected to interest or penalties. So that is some good news coming from Finance Minister Nirmala Sitharaman. Then, of course, hostel fees. Hostels which were already within educational campuses were exempt from GST. Finance Minister just mentioned that hostels which are now stationed even outside the premises of education institutes will not be subjected to GST of any kind. And in addition to that, she also mentioned that all services of hostels under all services provided by hostels, whether within or outside the premises of an education institute, will also be exempt from GST. So this is something as far as students are concerned, but just reiterating, expectations were high that online gaming could receive some sort of a relief from the 53rd GST Council Meet. That hasn't happened. Expectations were also that there would be some discussion and some decision on aviation turbine fuel, or ATF, being under GST. There has been no mention of that as well. One interesting announcement coming from Finance Minister has been on milk cans. Milk cans made of steel or aluminium would be defined, and all milk cans, whether they are used for milk or any other purpose, would fall under the 12% GST. Even solar cookers, all solar cookers, whether they use one phase or two phases of electricity, are going to be under the 12% GST bracket. Remember, there were talks that there could be some rationalization of tax rates. Perhaps the existing broad level 4 GST slabs of 5%, 12%, 18% and 28% could be reduced to 3, where there could be a merger of the 12% and the 18% tax items under a single 15% tax bracket. There has been no mention of that either by Finance Minister Nirmala Sitharaman. What she did mention was that because of paucity of time, only a few items on the agenda could be taken up by the GST Council Meet. However, one more GST Council Meet, the 54th GST Council Meet, has been slated for mid-August, soon after the union budget is presented by Finance Minister in the month of July. These are some of the highlights which have come in from that press conference. Let's cut back to the question and answer round at the press conference and see if there is something else that needs to be picked up and discussed right here on News 9 Live.
हमें ये जानकारी मिल रही है कि दिस विल बी फिजिकल वेरिफिकेशन ऑफ फेकरी का हम कम कर सकते हैं।
एक सवाल
272 next.
कैंपस आउटसाइड कैंपस को जो एग्जाम्पशन मिलेगा जीएसटी से, उससे स्टूडेंट्स को क्या फायदा होगा? कुछ
बिल्कुल स्टूडेंट्स का फायदा होगा, क्योंकि कम्युनिटीज बहुत सारे स्टेट्स में उनके रूरल बच्चे के लिए सुविधाजनक सस्ते में हॉस्टल्स दे रहे हैं। हर एजुकेशन इंस्टीट्यूशन में रेजिडेंशियल फैसिलिटी नहीं रहता, इसीलिए रूरल एरिया से जो बच्चे सिटीज में आकर पढ़ते।
All right, that is the press conference still continuing. Shivam Mehta, executive partner, Lakshmi Kumaran and Sridharan continues to be with us. Shivam, absolute silence when it comes to inverted duty structure, when it comes to rationalization of GST slabs, when it comes to online gaming or even the aviation turbine fuel. Nothing really which industry or citizens were expecting got taken up. However, what did get taken up was the Section 73 GST notices which have been issued under Section 73 between financial year 2017 and financial year 2020, rather 2017, 18, 18, 19 and 19, 20. Interest and penalty would be waived on all those notices if the amount demanded has been paid in full by the 31st of March 2024. Good news for those who were reeling under the pressure of tax demand notices and slapped with interest and penalties.
Okay, one correction. I think what she said is, of course, for 17, 18, 18, 19, 19, 20, these are the 3 periods. Notices issued under 73, tax has to be paid by 31st March 2025. So she has given you 6 months or 9 months time to pay these taxes, and they will waive off interest and penalty. It's a big relief. Only problem is, most of the notices which industry gets are under Section 74. Because usually department allege that you have committed some fraud. So majority of notices are under 74, not under 73. She made it very clear that if there is a case of fraud, etc., there is no relief whatsoever. That's one point which I want to highlight. Second point, she's talking about notices. In many cases, I suo moto go and pay the taxes, and I exercise my right under the very same section. So suppose you are running a business and you come to know that by some mistake you have paid lesser tax. You go ahead and pay the tax, and you also along with that you have to pay the interest, and the notices are there will be no demand, no notice against you. There is no mention about that. What will happen in those cases? Because there could be 17, 18, 18, 19, 19, 20 periods wherein I do not have notices, but I know that maybe there is a mistake, etc. I have done. Whether I can use this new provision, these are the details I think which we can see in our fine prints. Definitely a big side of relief for those who already have these. But as I said, majority of chunk is outside 73, majority of them are under 74. So not a huge relief so far as industry is concerned, but those who have these, they should actually exercise it, because interest in GST is 18% per annum.
All
so
right.
if these are 3 years demand, so the interest might be even more than the tax demand as on date.
Okay. Something very interesting with the finance minister mentioned, Shivam, if you heard it, was about the incentives to apple growers and boxes of all kinds, cardboard boxes, some wooden boxes, all of these are likely to get exemption from GST. What do you make of that, and the timing of specifically going with the apple growers at a time, when J&K is important for the government?
Okay, I think corrugated boxes, there was always a confusion about these boxes, what will be the rate of tax. In 21, I remember they increased the rate of tax to 18. Now, most of these boxes act as a packing material. Ideally, they should be under 12% category, especially when they are used for the packing of the goods. Let's say I'm using a packing material for packing of products like fertilizers or other products. This packing cost, higher rate of this contributes towards inverted tax structure also. So therefore, it's a big sign of relief, because what I see, I don't know, milk can also, my sense is milk can is also a move towards rationalizing the rates. Because if you look at milk products, most of the milk products are under 12% category. So milk cans under 18 would mean inverted structure in their entire supply chain. That's what they have probably have done it. Definitely a positive move, because corrugated box industry, I know, as I personally dealt with them, they have been struggling with the rate structure for quite some time, and this was a demand which was pending for last many years. I think it's a big side of relief for them, particularly this industry of corrugated box.
Okay, I want to come back to and spend some time on specifically what the citizens will benefit, not exactly the business community, but talking about citizens. I think two specific instances mentioned by Finance Minister. Number one being hostels. All hostel fees which pertains to hostels within educational campuses were already exempt, FM says. But in addition to that, now hostels which are not within the education premises, but also the service that go into hostels are now going to be exempt from GST. This was number one, Shivam, and the other one pertains, let's talk about hostels first and then we'll come to the other one on solar cookers.
See, the hostel, she's right. When Finance Minister said hostel fees is exempt when it is charged from the student, there was only one catch to it. The provisions was in such a manner written in such a manner, the authorities were interpreting that if the hostel fees is collected by the educational institution, then only it is exempt. But most of the educational institutions outsource the business of hostel to some other legal entity. Therefore, the fees is charged by some other legal entity, but from the students. So there was always a dichotomy whether the GST will be payable or not. This is a big side of relief for all education institutions for sure. There was, I know, personally I have dealt these matters, there were some disputes with the tax authorities they were facing. This amendment will at least keep that in peace, and for future also students will be benefited. There will be no question of taxes, and ideally there should not be any taxes on education. A country like India, wherein half of the population is I'll say need this. You are talking about unemployment. There should not be any taxes on educational institution, and it's a big move. I really appreciate. It was due. It should have been done, and it is done today. It's like she said, there was very less time, and still they took up this hostel. I'm very happy for the students and the country for.
Okay, and what about solar cookers? Because I think solar cookers, again, a pure play household item, something which is completely aligned with the government's vision of being net carbon neutral, overall the entire push on renewable energy. Solar cookers, both using one phase, two phase, now under 12% GST. What has really changed for those who are intending to buy a solar cooker now?
Oh, I think, again, solar cooker could be, let's wait for the details, could be. These solar cookers are probably used in a supply chain wherein it's not about I don't know whether she's talking about end-use solar cookers. Again, this could be a move towards rate rationalization. We have to wait for the details for what kind of solar cooker or what exactly she's referring to. Again, my sense is all these rate structure changes which she mentioned was for inverted rate rationalization. That's my sense. We have to wait for the details to answer that.
Right. Well, I also want to touch upon the unfinished agenda, Shivam, because Finance Minister said that there was a paucity of time because the first half of the meeting was dedicated to Finance Minister's laying out their expectations from the budget, and only the second half of the GST Council meet was actually dedicated to the GST Council meet itself. And now the unfinished agenda is likely to be taken up in the month of August. Mid-August is what FM said, definitely before end August, a few weeks maybe after the union budget is presented. What is the unfinished agenda as per you, Shivam? What is there yet to be taken up, which we have seen complete silence on this time?
See, one, we discussed about it. I think if there is no change so far as natural gas and ATF, I'm surprised. It was definitely, my sense is it should have been in the agenda list. And at least these two products would have definitely helped the industries those who are in gas manufacturer, gas producers, or in the supply chain in the petrochemical industries from polymer to plastic, which could have actually reduced the cost in the supply chain to a large extent. I'm surprised why that was not taken. That could have been, these two industries could have been brought in the tax net. ATF certainly would have helped airline industry, especially when they are in the most of them are in a very, very tough time. They were looking for some support from the government in terms of if ATF can be brought in the GST net, at least the overall cost of running the aircraft would have gone down substantially. These are the two things. I don't know whether they were taken today or not, but I was really hoping if they can, that should have been mentioned. Another is I should also mention about there were certain agendas like gaming was something which in October they said we will review for 6 months. Today there is absolute silence on it. I'm surprised why there is no mention about it. Another is I should also talk about some changes which was due from the government, which was announced in last agenda meeting. This agenda meeting industry was looking forward to is one is on the liquor industry was looking at no GST on ENA. Now since October 23, it was announced in the press release that we are giving up our rights to tax ENA so far as GST is concerned, and the industry has stopped paying GST from October. Now, with absolute mum on what has happened thereafter, and we are talking about a good gap of 8 months, whether they have actually considered they will be coming out with the amended provisions, etc. If not, then it's a serious thing for liquor industry as well. So
Right.
these are the two things I was expecting, at least 3 points which I mentioned I was expecting. But I don't know, maybe they are there in the fine papers. Like she said, we'll email the details to you. Maybe those things are there, but definitely I don't think so. Natural gas and ATF has been considered.
Right. Let's cut back to the presser, which is still on, and see some of the questions that Finance Minister is addressing. And then I want to come back to you, Shivam, and discuss this Aadhaar-based, biometric-based GST registration. But first, let's listen into what Finance Minister is speaking at the presser.
So the revenue foregone will not be much.
264 at the back left.
To the GST rationalization only. So the discussion on the rate rationalization has been going on since 2021. So could you please share what specific items are being discussed for this? This
What
is Harit from
specific?
News 18.
What specific?
Items are being discussed for rate
See,
rationalization.
as
as of
I
now?
said, the committee, which is a group of ministers, will do a presentation to the council in the next meeting. Then we'll know what issues are being taken up by them, how far they've progressed, and what will be left for them to do.
We'll take the last question here, number 10.
Ma'am, I am Monica from the New Indian Express. Ma'am, a lot of companies, they have filed writ petition against the council's decision related to GST on corporate guarantee. Was that taken up in today's meeting?
So corporate guarantee here, it is being clarified that in case it is for services or goods where whole ITC is available, the corporate guarantee will not attract a GST. So that is a major relief because most of the goods, services are taxable and they are not exempt. So all of them will get this relief.
Okay. And also regarding this anti-profiteering, so introduction of sunset was expected in today's meeting in the anti-profiteering provisions. Was that also discussed?
Yes, that was taken up today.
Yes, and it was decided that this will be sunset. So the last date that has been fixed for this is 1st April 25. However, the cases which have already been registered, they will continue to be heard and they will be decided. The other decision taken in this regard is to shift from CCI, the Competition Commission of India, the hearing of these cases, to the to the GST 80 as and when it becomes functional.
Also, sir, ma'am, I would like to know about this pre-deposit new limits. So now, if someone has already paid the extra, if someone has already paid this pre-deposit according to the previous law, now will they be eligible for the extra amount they have paid for the refund?
This is prospective.
Okay, okay.
Thank you so much, ma'am.
Just one information which I want to use this opportunity because I'm before the media, and through the media I want to reassure the assessees that our intent is to make the GST assessees' life easier. We are working towards less and less compliance. I want to underline the fact on behalf of the CGST that notices are not being sent here, left, right, and center. Because most often we are asked, why so many notices? Don't you know what's happening? And so on. I want to use this occasion to let you know that only 1.96% of all active tax assessees have been sent any notice from the central GST. So if there are 1,14,939 active assessees, it is only to less than 2%, 1.96% assessees, 1,14,939 assessees. Less than 2% of them have been sent notices from the central GST. I want to be clear on this. Our intention is to make it easier, simpler, less cumbersome. And sooner that we talk of more and more ease of doing business, we'll follow that. And that is proven by this data that as of 31st December 23, only 1.96% of these assessees have been sent a notice or a notice. So not beyond that. So 1.96% of the 1,14,900
All right, so Finance Minister, they're saying that the number of tax notices being sent by the center are very small and just 1.96%. But Shivam, if I can bring you back in, Shivam Mehta, Executive Partner, Lakshmi Kumaran and Sridharan, who's been with us right from the start of this show. Shivam, 1.96% doesn't seem like a very small number. You're pretty much sending a demand notice to 1 in every 50 companies which are filing GST, and Finance Minister really insisting that that it is a taxpayer-friendly sort of a regime and a compliance ease which the GST Council wants to introduce. But 1 in every 50 tax filers getting a notice doesn't seem like a small number to me.
That's a very, very huge number. If you look at, in fact, as you know, there is no tribunal as of now. The disputes are pending. In the absence of tribunal, people have approached high courts. High courts have refused to interfere. They are saying once the tribunal will be formed, we'll take care of that. I'll be surprised if these disputes get any timely redressal even when the tribunals are formed.
And more than that, now there has been a limit also set on the appeal. So 20 lakh if you want to appeal in the appellate tribunal, 1 crore if you want to take it to the High Court, and 2 crore rupees if it is the Supreme Court. So what do these limits really mean? Is it business friendly or is it not as business friendly as it should be?
No, I think it's one, these monetary limits were always there. In the previous regime also they were there. Almost similar what they have mentioned, she has mentioned in this speech. It's definitely to reduce the burden on the courts. Also, it is a way lot I have seen in the past based on my experience. These are always considered as tax friendly, so that if your tax demand is up to 20 lakhs, you got a relief at a lower level. Tribunal, there might not be any appeal from the government to the tribunal, even if that orders is incorrect. So in the case of High Court, it will be 1 crore. So in the case of Supreme Court, it will be 2 crore. So small taxpayers may not have really do not want these disputes to go to High Court and then to Supreme Court. They really do not have enough financial strength also. So if you look at the limits, they are fine. They should be there, both friendly for the courts as well as for the taxpayer. It's a positive move. It should have been there. It's a very, very positive move.
Right, positive mood is the word coming in from Shivam Mehta. Shivam, thank you so much for being here with us for the last 1.5 hours, really helping us decode what should have been in that GST Council and eventually what came out of it. But before we end the show, I also have Anita Rastogi, Principal, Price Waterhouse and Company LLP, joining us. Anita, we've got just about 2 minutes or so. I want to get a sense from you. What was the highlight from what you heard from the Finance Minister and the Q&A session after that? And what are the very, very specific miss areas that must be taken up in the 54th GST Council meet in the month of August?
I think the highlights were that, yes, clearly the focus was on ease of doing business. But I think what she answered with the question was regarding anti-profiteering. So very clearly, they have said that 21st of April 2025 is going to be the sunset clause, which means after that, there will be no more cases which will be registered for anti-profiteering, which means whenever there's a rate arbitrage, rate changes, or there's a more excess credit which is being taken, so on and so forth, there will be no anti-profiteering case which will be filed against the assessee. So that's a very, very good news, because there had to be a sunset clause. One. Second point is there's also a very slightly, they just shared something in the question answer, was regarding a clarification of corporate guarantee, where they have said that they would be giving a relief on corporate guarantee. They will be kind of giving some sort of an exemption if the corporate guarantee is pertaining to goods or services which are largely taxable. So we believe where largely the ITC is available. I think that's what he was saying, because he said it in the last moment. These two are the good news in the question answer session. Overall, I would say that there was a huge amount of expectation, because the number of agenda points were very, very many. This GST Council meeting happened after 8 months, which itself is a very long term.
Right.
Another good news I would say is at least the intent of the government at the last, they did say that they don't want to do too much of litigation. The show cause notices, because there were umpteen amount of demands being raised in the last 1.5 years against the taxpayers across India.
Right.
FM actually said that, states are doing, yes, we know, but from a center perspective, they believe that they have not really done too much of demand notices to the taxpayer, which is only 2% of the total central taxpayers as far as her calculation goes. But their intent is that they will not be issuing show cause notices left, right, center, which is a good news.
Right. On the unfinished agenda, I want to come to the unfinished agenda in the interest of time, Anita. The next GST Council meet in August. Online gaming, there was complete silence. Fuel, whether ATF or petrol, diesel, there was complete silence. Inverted duty structure, especially for automobiles, there was complete silence. And rationalization of tax slabs. Are these really the priority areas of the government, or do you think we are jumping the gun and the government has a different priority and we are unable to sort of grapple with that reality?
No, I think the reality is that they have just too much thing on the plate, and they really did not do enough and more in the last 8 months. If we would have had those regular GST Council meetings, other than the fact during elections where we can't have, I don't think that so many line items would have been pending for them. But at least she did mention that the next GST Council meeting is going to be quick and soon. It will not be delayed. So they really have to quickly take measures on that as well. Specifically, there are multiple litigations on many matters which are now going to High Court and Supreme Court. I think all of them should be put at rest, like majority of them, wherever it's a matter of interpretation and you just have to give a clarification. I think that is very critical for them. So government has a lot to do. We just want them to actually take up all of these matters, and in the next soon GST Council meeting, they should close up all those matters as well.
And one final word, Anita, before I let you go. This just concluded 53rd GST Council Meet. Was there anything in it for the common man apart from perhaps hostel services and solar cookers? There's been absolutely nothing for the common man who continues to reel under inflation, urban unemployment, and of course, very high direct tax rates. So, has the GST Council once again not lived up to the expectations of the common man?
Yeah, just one more, I think, on the Indian Railway side, on the platform tickets, etc., they have kind of exempted the GST on that, which was always exempt. They had just brought in a couple of years back for a year or so. But you're right, they have not really done anything for the common man at all on this, because that is primarily to be driven by the Fitment Committee on the rate change. And there's hardly any rate change they have actually done. So yes, a lot of want as to what they need to do next steps from a common man perspective. A lot of it.
Principal, Price, Waterhouse and Company LLP, thank you so much for joining us. And with that, we've come to a complete end on this particular show on what the GST Council Meet held or did not hold for the common man. That's a wrap, but news and updates continue right here on News 9 Live, so stay tuned.